Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market-moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Friday, and we'll start with the global markets. US markets rebounded overnight after softer than expected inflation data lifted hopes of lower interest rates in 2026. November CPI rose 2.7% year on year, which was below expectations. Tech stocks and chip makers also advanced on strong revenue guidance from Micron. Subsequently, the S&P 500 snapped a 4-day losing streak, rising 0.8%. The Nasdaq surged 1.4%, and the Dow gained 0.14%. Asia-Pacific markets moved higher on Friday as investors awaited the Bank of Japan's policy decision. Markets are pricing in an 86% chance of a rate hike to 0.75%, which would be the highest level since 1995. Japan's Nikkei rose 0.56%, while the Topix gained 0.57% in the early hours. Moving on to the Indian markets, Nifty ended marginally lower at 25,816, down just 3 points, whereas Bank Nifty fell 14 points to close at 58,913. The Nifty failed to sustain about 25,950, a key resistance marked by the previous day's high and the upper end of the falling channel. This led to selling pressure, with the index forming a small bullish candle but with a long upper shadow. However, Nifty found support near 25,726, close to the lower Bollinger Band. For today, the 25,900 to 26,000 zone remains a critical resistance. A decisive breakout above this range could push the index toward 26,200. On the downside, a move below 25,764 may lead to profit booking towards 25,700, which remains an important support level to watch. At the sector level, Nifty IT led the gains with a 1.2% rise, while Nifty Media was the worst performer, slipping 1.3%. Out of the 12 sectoral indices, 6 ended in the green and 6 closed in the red, reflecting a mixed market breadth. Amongst the F&O stocks, HDFC AMC was the best performer with a gain of 7.2% as SEBI revised expense ratios and raised the brokerage cap for mutual funds on equity trades to 6 bps from proposed 2 bps. At the other end, Power India was the worst performer, declining 5.3%. On derivatives, yesterday, the derivatives market turned cautious as FIIs became marginal net buyers for the second straight session, purchasing shares worth 596 crores. Despite this, month-to-date FII outflows remain heavy at 12,924 crores. Nifty and Bank Nifty futures saw a mild pullback along with a decline in open interest. This points to tactical profit booking rather than fresh aggressive selling. The Nifty futures premium also narrowed to a 10-day low of 65 points, reflecting cooling momentum. FIIs remain cautious with a low long-short ratio of 0.09. However, their positioning has shifted toward being long on stocks while staying light on index exposure. Proprietary traders stepped in to absorb selling from retail participants who moved toward defensive put options. The rise in Nifty put call ratio and the drop in India VIX to a subdued 9.71 suggest a volatility crush, with put writers strengthening support levels. Meanwhile, the rupee strengthened to 90.26, appreciating 12 paise against the dollar, providing a supportive macro backdrop for FII stabilization. For traders, the 25,600 put strike remains the key support zone, while 26,100 continues to act as immediate resistance. On commodities, spot gold traded volatile on Thursday and closed at $4,230 after hitting an intraday high of $4,375 near record levels. Prices were supported by softer US inflation data, which increased expectations of further Federal Reserve rate cut. Technically, gold continues to form higher highs and higher lows, reflecting a bullish trend. Meanwhile, WTI crude oil ended 0.6% lower at $56.2 amid rising supply concerns after the US ordered a blockade of sanctioned oil tankers linked to Venezuela. US crude is down about 21% this year, marking its weakest annual performance since 2018. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you and see you on Monday at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.